And Facebook continues to fall out of favor with Wall Street. Shares of the social networking giant sliding once again on Thursday, marking a 5-day losing streak. This as the company continues to grapple with a host of issues, including ongoing doubts about its growth prospects and a string of recent executive departures. Investors are also struggling to make sense of what impact the potential insider sales of the stock will have when the lockup period expires on August 16th. Shares of Facebook have lost almost half their value since their initial public offering in mid-May, now down 47% from its offering price of $38 a share. The stock traded as low as $19.82 during Thursday's session, but closed the day at $20 a share, down 4%. Now, the Facebook IPO debacle and the recent computer trading glitch is once again shaking up investor confidence on Wall Street. And tonight we are joined by Mark Grant. He's the managing director of Southwest Securities. He joins us now from Florida. Thanks for joining us tonight, Mark. We've heard from Knight Capital. They've said that this is really an isolated problem, but at the same time, we've seen what happened with the glitch, what happened with the IPO for Facebook, same thing with bats. This seems to be a widespread problem. Should we be asking regulators to do more? And if so, what can they do?
Yes, I think the regulators should do more, and there should be one regulatory body. Unfortunately, the way we're structured in the United States now, it's by exchange or some kind of oversight of a number of bodies, and we need one regulatory body to police and make sure that the markets function in an efficient manner.
Now, a $440 million hit to Knight Capital, that is substantial. It is more than their revenue in the second quarter. Does this really mean the end of Knight Capital?
No, I don't want to be on record saying something like that. It certainly is a substantial hit to their earnings and to their capital. What I'm more concerned about, to be honest with you, is that we keep having these glitches in the American financial markets, which makes us look not as stable as we should, which is why I think in this move to electronic trading and all of the fast money trading that we're going through, that both the Congress and the SEC need to look at this very, very carefully.
Yeah, especially if we're seeing that increasing numbers are actually trading through electronic exchanges. What has this really done for investor confidence? The retail investor has really stayed on the sidelines in recent years. We had the glitch 2 years ago, the big crash in March in terms of a computer glitch. Is this really going to have an impact on the retail investor's perception that it's rigged against them?
Well, I think the retail investor and the institutional investor, which is my world, wants to know that it's a level playing field, that orders are entered, that they're not going to take losses that are out of their control. I think most people, either retail or institutional, understand if they make a mistake that they're responsible for their mistake, but what they don't want to find themselves in is in a stock exchange where there are mistakes made that are not theirs that then they have to take losses for, and I think that's a travesty.
Right, being out of control is never a good thing. Now we've got jitters, of course, because of the glitch. We've got jitters also about Europe. Do you think that this market has any chance of turning around anytime soon, or is there too much uncertainty out there right now?
I think there's too much uncertainty and there's too much risk. I think what took place today with the ECB was a freshman mistake on the part of Mr. Draghi. He overpromised, he couldn't deliver, and I think Germany stood firm by all indications in saying that they were not going to give up their position as the preeminent funding partner of the European Union so that they can have the same standard of living or the same cost of funding as Athens or Lisbon or Madrid.
So Europe will drive the markets for a while. Thank you so much, Mark, for joining us today. That's Mark Grant, Managing Director of Southwest Securities. Have a great night. And now let's head back